as Bitcoin continues to consolidate, the cryptocurrency market is going through a great shakeup. Grayscale continues to dump Bitcoin through Coinbase onto the open market in $500 million clips. Why? Well, it's because Grayscale has had fees for a long time of 1.5% to get into their trust, and now, with BlackRock and ARK and Franklin Templeton, their fees are significantly less. So what we're seeing is a great exodus from the Grayscale Bitcoin Trust and money flowing in to every other ETF. BlackRock's Bitcoin ETF was the first to hit $1 billion in assets under management. Fidelity became the second spot Bitcoin ETF issuer to hit $1 billion of inflows. If this continues, you know, for years, besides Satoshi Nakamoto himself, Grayscale has been the largest holder of Bitcoin. Well, what we're seeing, this great shakeup, BlackRock is now on track to surpass Grayscale's Bitcoin holdings in just 37 days. How can Grayscale justify such high fees for custodying Bitcoin through an ETF? The CEO has just responded. Listen to his explanation. You tell me, do you think this is a good enough explanation?
Michael, it's Guy. Great to see you. Thanks for stopping by. Look, one of the things people are pointing to with you guys is you've still got relatively high fees. Some of your new competitors don't. How are you going to square that circle?
The reception we've heard from the investment community is really one of really thanking Grayscale, thanking GBTC for forging a path for these other products to come to market. GBTC, paved the way through our SEC lawsuit, our SEC victory, and ultimately really over the last 10 years developing the disclosures and the operations and the mechanics that now other asset managers and other issuers get to borrow from. Now, that being said, we're meeting investors where, they're trying to invest. And I think that from a market perspective, GBTC's fee really does differentiate itself by those factors, the size, the liquidity, the track record.
Totally get that. Is it worth 100 basis points?
We certainly think it is. I think for an asset class like crypto, a lot of people are pointing to the fact that some new entrants are coming into the space, some of the world's largest asset managers. But this is their first time dealing in crypto assets, operating crypto investment vehicles. And so as an investor, when you're choosing amongst these products, fee is a consideration, the asset manager, the issuer behind it is a consideration, but so should size, liquidity, and again, that track record.
The great shakeup continues as Vanguard continues to refuse to offer Bitcoin ETFs to their clients. People are boycotting Vanguard because of this, but Vanguard says, hey, we won't lose a single 401k plan over it. Hear the words from the CEO himself.
We won't be pursuing a Bitcoin ETF. Just like we don't use gold as an asset class for our clients. So it's not that people can't invest in there. We just look at asset classes for, what belongs in a long-term portfolio, what has intrinsic value, has cash flows to it, and those are the asset classes we steer people towards. And so we don't go towards Bitcoin or gold or any other of those stable assets.
The question is Vanguard's refusal to have anything to do with Bitcoin in ETFs, is this temporary or is this permanent? This is Eric Balchunas. He is the senior ETF analyst for Bloomberg. Eric has been one of two expert Bloomberg analysts keeping us up to date with what exactly is going on with these Bitcoin ETFs. So he's got a lot of insight to share. Listen to his answer to this question. I love the analogy he uses.
So Eric, this refusal to allow Bitcoin ETFs to trade on his platform, do you think it's temporary or permanent?
Look, I think down the road they're going to lighten up. I think for now this is just not in their DNA. It's almost like repellent to them. They generally don't like commodities in general, right? Bogle was real into stocks and bonds because that money works for you, right? It's about dividends and earnings growth or a coupon. A commodity is just what somebody else will pay for it. Now, they do have GLD trade available, but that's a commodity that, quote unquote, has usage. So they just see this as a commodity and no usage. So it's like a double whammy for Vanguard. And you have to understand that Vanguard's like the family-friendly kind of brokerage platform. They don't allow VIX products or none of the fun stuff, no leverage products. The metaphor I use for this is if you're old enough, you remember in the late 80s, Walmart would not carry certain rap albums like 2 Live Crew.
Okay.
And it actually created buzz and intrigue in the albums. It did nothing to Walmart. Like, shoppers were going there for other things, cheap goods. They didn't care.
Yeah.
But it actually helped the album. This has kept the story going, I think. This has given the story more legs. So the crypto Twitter that's freaking out, I'm like, it's not that bad of a thing. And nobody who goes on Vanguard really wants Bitcoin anyway. It's not your audience.
Yeah, Scarlett, I don't know how much time you spend on crypto Twitter, but hashtag boycott Vanguard has been a hot topic over the past week.
By the way, make sure you subscribe to our channel. Daily videos just like this, keeping you informed on the entire cryptocurrency market. If you're interested in making money in cryptocurrency, subscribe to our channel, Daily Videos. It's true, a great shakeup is happening. While institutions like Vanguard are dropping the ball, other institutions like Franklin Templeton are picking up the ball. Bitcoin, Ethereum, Solana, Ordinals, Bitcoin Layer 2s, the Solana ecosystem, the Ethereum ecosystem. So how deep into Bitcoin and crypto is Franklin Templeton? I love this interview with the CEO. Franklin Templeton CEO Jenny Johnson underscores the importance of Bitcoin in protecting individuals from asset seizure by governments. Quote, there is a fear component to it that is considered almost an insurance or safety component with Bitcoin. And she talks about crypto at large. Listen.
Got a very special guest this morning, Jenny Johnson, President and CEO of Franklin Templeton, which has $1.5 trillion in assets under management. The 76-year-old firm was one of the roughly dozen to launch a spot Bitcoin ETF just last week after the SEC gave the go-ahead. Jenny, great to have you with us here on set.
Thanks for having me.
Let's start off with the Bitcoin ETF. I do want to, of course, get your take on the markets. But in terms of the Bitcoin ETF, we've seen massive inflows. That was expected in the early days. What do you expect as time moves on? And who are the incremental investors in this ETF, in your view?
You know, it's funny. I'm known for saying that Bitcoin's the greatest distraction from one of the greatest disruptions in financial services, which is blockchain. So a lot of people took that as I'm not a believer in Bitcoin. And yet, you know, launching this ETF, you can see, obviously, the demand that's out there for Bitcoin. And I think there's a lot of reasons why that is. I think that, one, from a blockchain standpoint, the ability to pay, Bitcoin's going to be a key component of that. And the technology is going to open up a lot of really interesting types of investment opportunities. We actually launched a tokenized money market fund. We're the first mutual fund first traditional asset manager to actually launch a 40 Act fund on a public blockchain, on the Stellar blockchain. So Bitcoin is just one of the suite of what we think are opportunities here. You know, one of the things that made me a believer is as I went around the world talking to people who would tell you, I had somebody who said, I keep 50% of my savings in Bitcoin because if I say the wrong thing in my country, I could have my assets confiscated. I remember talking to somebody in Israel who said, my parents and their parents had all of their assets confiscated. They keep a portion of it in Bitcoin. So there's a fear component to it that is considered almost a insurance or safety component. But I also think it's really important to fueling what is a next real opportunity in this blockchain world.
Right. So, I mean, the scenarios that you just outlined, that's the case for holding Bitcoin, the actual, you know, you have the keys to the security as opposed to investing in an ETF. Right, so there's a use case for both.
For sure, but that still keeps a floor on the price, right?
Yeah.
So it keeps on the floor on the price. And then if you've actually tried to acquire and deal with the keys, it's really complicated.
Yeah.
Right? I mean, I did it at one point, and then I was trying to actually figure out how to get back in, and it's hard. And so being able to open it up and have access to that through an ETF and just simply through your brokerage account is a much better way to access it.
If you're interested in making money in crypto, make sure you give us a follow. We post one video on YouTube every single day, keeping you informed, also very active on Twitter. Join the Altcoin Daily Army. 2024 is going to be an epic year for crypto holders.